Hedge fund software provider Liquid Holdings went public this July. The company's CEO, Brian Storms, here to talk about trends in the industry. Welcome, Brian.
Thank you. Good to be here.
Well, it's certainly been stormy since you went public in July. Stock went from 9 to 6. Now you're back above 9. How does it feel to have your liquidity event behind you?
Well, it feels great. Obviously, that was a lot of work to prepare for that in what I think most people would agree is a reasonably short period of time in this company's history. So to organize the company in a way that we could operate publicly, to get our product into the marketplace, and then have a successful IPO was not without its challenges. It's nice to have it behind us and have our full attention on the marketplace.
Why don't you explain it is, once again, what you do for the marketplace, what your products are?
In essence, we've taken what are generally referred to as mission-critical software. In this instance, there's 3 types of software that most, if not all, hedge fund managers use in their day-to-day work. They use some form of a trade management or an order management system. They use risk analytics of some type from some vendor, and then they have an accounting package that accounts for all of that, creates NAVs and does the traditional general ledger type accounting that all hedge fund managers use. The industry is largely served by multiple vendors. So if I'm a hedge fund, I may have 3 or 4 relationships to accomplish all of my needs, my critical needs. And what we've done is we've combined all of those mission critical software onto one integrated piece of software, eliminating all the redundant needs for multiple vendors. Because we're born in the cloud, we are truly a proprietary cloud-based company, which is a long discussion. We have tremendous advantages in terms of how we deliver that software, how we price that software, and how we service that software.
Is it safe up there in the cloud? We've been talking about NASDAQ outages and flash crashes. People are kind of worried about technology on Wall Street right now.
You know, technology is such a broad and complicated subject, so you really got to parse that subject and get down to more of a more detailed discussion. But yeah, we're very mindful of the noise around technology. But the proprietary cloud aspect of our business is really, it's a transformational aspect to software. It's not a small change. We equate it to what PCs did to mainframes, cloud computing is doing to PCs, and you see it everywhere. The signs are everywhere. So we could dig into some of the tech crises that we've experienced in the last few months. They're not related to proprietary cloud technology. And in fact, when you get into cloud technology, everybody has a different view of what that means. Simply stated, we've built our own proprietary cloud. We didn't port mainframe or mid-range computer type software into a cloud. We built this organically, and it's architected in the cloud, and there are huge advantages operationally to do that.
Can we dig into what hedge funds are doing nowadays? We keep hearing about the Lobes and the Soroses and the Einhorns and the Ackmans. But what kind of hedge fund formation are we seeing? There's got to be a lot of small ones popping up, and are they using your service?
Well, there is, and the trend line continues to be very favorable in terms of the formation of smaller hedge funds. In our marketplace, while we're very appealing to the small end of the market and to the startups, we're equally appealing to the larger hedge funds as well. So if you get away from sort of the headline names that you just mentioned, this is a very large addressable market, both here in the US and around the world. Our software really plays to a couple of important themes that are taking place in the marketplace. Fee compression is everywhere, so there's more of a concern about costs, the cost to manage a fund today than there ever was. The regulatory hurdles and requirements are daunting, and how do you manage that, and how do you manage that cost effectively? And there's several other trends that are taking place throughout the entire hedge fund industry that really support the sort of approach that we've taken to software. So the trend line is our friend. I think the cloud computing is a macro trend that's unstoppable, and we're positioning the company right in the middle of that.
And do you think all these trends are going to help you throughout the remainder of 2013 and 2014? In your August second quarter, your revenue went down slightly from the first quarter. What's your outlook for the rest of the year and into next?
Well, as far as the second quarter was concerned, we had a one-time event. We had a business that discontinued operations. We had an OTC trading desk that was not in any way consistent with our business model. It was pre-existing when I joined the firm. We jettisoned that business. There was an adjustment in the second quarter. I think you'll see a positive outlook for this company going forward throughout the third and fourth quarter and into next year, indicative of what you see in SaaS-based companies. You would expect to see the kind of growth that you'll see in the cloud computing businesses. So without being too specific about a forecast here, I think you'll see a different performance for the company going forward.
All right, we'll keep watching. Thank you, Brian.
Thank you.
Thank you for watching The Street.